Going on, everyone? How we doing? All three of us in here so far. Hopefully these numbers will pick up a little bit, but how's everybody doing? Good day today?
All is well, all is well. Thank you. How you doing?
Yeah, for sure. For sure. We had a couple fun ones in both my VCs today, but nothing overly exciting. I was bummed. I love trading this kind of stuff. I know a lot of people don't, but I just wasn't trading during any of this. And so but I love that. Like I love a range. I love a range.
Yeah, it actually looks good.
I mean, when they show you something like this and it's like, you know where you want to be long, you know where you want to be short. And when they run it out for 4 hours like that for you, it's always pretty
Yeah,
dang nice.
it just loads up.
But I know people hate that trading. Most people hate that trading. They would way rather like short this, hold all day to catch this. But I'd rather just be long and short a few times and do the
Up
same
and
as
down.
waiting for that. Yeah.
Catch a
But
couple
I,
moves in there. All
yeah,
right.
but I know a lot of people don't like that trading. So if you aren't able to like identify ranges and identify what you're planning to get out of those ranges, then most people hate it.
Right, right. Oh, that's interesting. Yeah. Like you said, most people don't play it that way, but it gives you multiple opportunities quick.
Yeah, and my favorite thing about this, I mean, so I guess we can just yep, since we ain't starting yet. My favorite thing about this is we know where we want to be long and we know where we want to be short. Those are the areas we want to be long and we know where we want to be short. So your stops are tight. You're risking nothing, and you know your target's a buck 50 or whatever below you. Then you long it down here. Again, your stops are tight. You're risking 20, 30 cents to catch a buck 52 dollar move up. Like the risk reward is just sick on these. I love this. And then, you hit the short, you hit the long, you hit the short, you hit the long, and you'll make more money than the people who held shorts all day and caught this nice couple bucks selling to the close. Like these
Yeah.
these scalps will pay you more than this. But you got to sit there and be active. And I understand not everybody wants to do that. So
Right.
I've worked with people in here long enough over the last, 4 or 5 years that I've learned people hate ranges, and that's okay. They don't have to like them.
Is that what candles are you looking at? Is that a
These are
5 minute?
yeah, these are all just 5 minutes. And so, you'll see from charting today, I do most of my charting comes on the daily, but we'll talk about how I identify this kind of stuff intraday as well. But I
Awesome.
use the big daily levels for, even all of my scalping. And by having the daily levels, it's kind of my way to, I'm looking at the daily time frame without having to look at the daily time frame. I still want to
Mhm.
make my decisions based on those big daily levels, but I don't want to sit and stare at the daily time frame, when I want to be trading on the 5 and 15 minute intraday. So those daily levels, I'm able to say, okay, this it matters on the daily. So when I get a 5 or a 15 minute around it, I'm happy.
Right, right. Cool. And what's your name?
Dirty River.
Oh, Jody.
Yo, River,
Yeah. How we doing?
you happen to see I sent you a DM just a little while ago. I accidentally called you, but I sent you a DM
I,
of
I saw I saw that you called.
yeah, that was an accident. No, I had I had those covered calls on Amazon for 250 and it just absolutely ripped. I think it touched 254 after hours. I don't know what it's at now, but
Yeah. What's the expiration on this?
November 28th.
Huh. Well, well, I mean, so one of the interesting things about, again, this isn't part of the lecture yet. Welcome everybody. We'll get rolling here soon. So so there's two types of options trading in the world. There's European options and there's American options. So obviously we're trading American options. And one of the interesting things about American options and where the difference is between us and Europeans is we can exercise whenever we want. That's what makes it an American option. I can exercise a contract that has 6 months of time. I can exercise it tomorrow if I want to. A European option, you can't do that. I will say you got 250 calls. So n-
I think break
nobody's going to
even's
be
like
rushing. Nobody's going
253.
to be rushing to exercise those things to make a couple of bucks on the shares,
Right, right.
no, and the 250 calls that they bought from you are going to be up a lot tomorrow.
Yeah.
Massive. Some November 250s that just caught a $30 move are going to be gigundo. I mean, that's huge. That's a huge. I can give you, I mean, I guess I can give you like a theoretical rough. Like this is again. rough idea. But November's what did we close the day at? 222.
222. Yeah.
They're gonna be worth $1,100 tomorrow. Probably, give or take. $900 to $1,100 per contract tomorrow. So chances are somebody's catching a 500% ripper right now, 400% ripper. Unfortunately, it's against you. But chances are they're just going to sell those, and then it's just going to go back to a market maker, and you'll be fine. I think. I mean, I think you got a chance at pulling back, but I mean, honestly, you don't want to buy them back. That's a tricky one. Let's talk tomorrow. That's a tricky one, but let's talk tomorrow.
Sweet. Appreciate
Yes, yeah, sticky situation. And it's that thing that I talked about. Remember, everybody tells you this shit's so safe, it can't go wrong. This is where it happens, this is where it happens. You're chilling, of course. I mean, because let's be real, 250 a share. Oh, that ain't bad.
Oh my gosh. Yeah. I think it was like up 34,000 just today after
Yeah.
that rip.
That's what I'm saying.
So-
That's what I'm saying. Yeah.
Not too much of a downside, but I don't want to, if I don't have to sell those shares, I'm fine with, I know it's
Yeah.
going to go back down, but I'm fine with keeping them.
Yeah, exactly. Yeah. So you're chilling. I'd probably stick with it for a little bit. I mean, let's hope they get a pullback. I mean, everybody knows that I've been mega bull on Amazon and I've been talking about it a lot. I'm unfortunately not in there for this, but shout out to the people who did catch the upside shares or whatever. Welcome everybody. We'll give this. Oh, actually, let me make another post and we will get to rolling. I see you got a couple questions and we'll talk about that. Okay, so welcome everybody. Happy to have you here, Dirty River. We're gonna be doing just talk about it for a second. So over the next 5 weeks, basically, I posted it in the live classes tab. I'm calling it, I don't know, Trading Essentials Crash Course, something like that. We're going to talk about things that I think every single trader needs to know. Not that they are super advanced. I know I said one of them is advanced charting. We'll get into that a little bit more, when that time comes. Not that they're super advanced, not that they're super beginner, but they're things that, in my opinion, every single trader should know how to do, should have a little bit of an understanding of all of the topics that we're going to cover. So like I said, it's going to be support and resistance this week, indicators that I like to use next week. Then we're going to do advanced charting and market statistics. What I mean by that, some of you have probably heard me say things like 80% of breakouts fail. We're going to talk about that type of stuff in the third class. Fourth class is going to be building a trade plan. So that's going to be on the back of the support and resistance, the indicators, and some of the advanced charting and statistics stuff. We always want to know, what does the market like to do repeatably? And I'm not talking, bull flags. I'm not talking things like that. These are real statistics in the market of, how often does something work? How little does something work? Once we know those, we know how to identify levels. We have a couple indicators. Are they necessary? No, but they just give you some additional confirmation. Once we know how to do those, three things, we can start to build a trade plan. So that's the fourth class trade plan. And then the fifth one is going to be Q&A, kind of a, just a run back of any questions anybody might have, and then a trading psychology, because obviously I think that's, trading's easy. I always say, I can teach somebody to chart in a week. It doesn't mean they're a good trader. It doesn't mean they know how to trade after that. Figuring out charts, having a rough understanding of charts is something that you can pick up on pretty quickly. Trading psychology is a battle. I have friends that have traded for 10 years and they still struggle with it. And I've got friends who have traded for a couple of years and really don't struggle with it at all. So it's different for everybody, but it's the hard side of trading, making the right choices when you need to make them, most importantly, stopping out when you need to be stopping out, those types of things. So that's going to be the final one, trading psychology. So just again, support and resistance this week, indicators next week, advanced charting, market statistics the following week, building a trade plan end of the month, and then Q&A will kind of be starting off December. So let's see if we got any questions, and then we will get to rolling. Vibe trading. Well, Tesla making a big move soon. Hopefully to the downside a little bit more is my hope. I was telling everybody, look for that poke under 450 and a move down to 440. Did set a nice double bottom into the close. But my opinion on Tesla, Not saying it's going to happen, but my opinion on Tesla, down into here. Let's get down to 415, 420, look for that dip buy, and then a run into end of year, and go find that 500 sooner than later. Let's see. Oh, so next question, how can you talk about how to choose the expiration date? We'll be going over that in trade plan. Obviously, contract selection is a very big part of trading and should play a role in all of your trade plans. People ask me, I love it when people ask me in, voice chat and things like that, why I took trades and looking at Greeks and why did I pick those Greeks over another Greek, and just kind of explaining how I like to pick them. And so much of that all comes down to your trade plan. This lecture tonight, it might not take the whole hour. If we come to the end, because I'm assuming you're trying to trade now, understanding a little bit of selecting proper options is pretty important. So if we got 5 minutes or so at the end, and I say if there's any questions, feel free to bring that one back up and we can talk about it a little bit. Lesson goes for about an hour. Yep. There we go, Zensei. How we doing? Oh yeah, if you guys want to learn the Greeks, I got Greeks. I have recorded lectures on Greeks in here already. I'm sure that somebody can look at that. Somebody saw repeat. I'm assuming that's mine. Somebody's already got it posted for us. So yeah, I talk Greeks all the time. I love Greeks. Again, market nerd. I like some of the, the weird things in the market. I just like to look at them more than anything for fun. But Greeks are something that I do like to look at, and I personally look at before I take any trade. Level of importance on scalps versus maybe a swing trade varies pretty heavily, but if you do want to be scalping or doing at least faster day trades in the market, having a rough understanding of Greeks is pretty crucial for you. Day traders, yeah, it's important, of course you need to be reasonable. And then, but it's still not like a scalp. You need Greeks in your favor, to capitalize on the quickest move possible. Swing trading, it becomes even slightly less important. I'm not saying buy your stupidly out of the money things, but you can get away with, slightly lower deltas and things like that on swing trades. Okay, but with that, welcome everybody. Happy to have you again, Dirty River. Tonight we are going to be talking support and resistance. To me, it's the most important part of trading. You can trade support and resistance, no indicators, no nothing else, and make a living and do well and understand the markets. There's a lot of different ways to do it. Tonight, we are going to exclusively be talking, price levels from the daily timeframes, sometimes the weekly timeframes as well, but mostly the daily timeframes. How to identify them? What do I look for? What are places where I'll put levels, things like that. And then we're going to talk about how do I use some of the shorter time frame support and resistance as well. I treat it completely different than the daily timeframes. And then we're going to go through this and we're going to do a few charts, and I'm going to kind of show you how I use support and resistance on many charts to tell me what to do when trading the SPY chart. So we're going to get a little bit into that. So again, if anybody has any questions real quick, we can take them. Otherwise, we will dive right in. We should almost do something let's do something different. Amazon, just because they had earnings. But we'll look for something that's not trading at all-time highs. So here we go. No more questions. Let me get a new thing here. Yeah, Amazon gone. We aren't talking about what Amazon's doing right now. Now we're just talking about what Amazon did in the past. So Amazon support and resistance. How do I draw it? What do I care about? So as most of you know, I trade different than most people in the Discord. The people who I trade most similar to, Shark, Tilia, those kinds of guys. We have a very different view on the market. We don't use any of the new, like Furu guys on YouTube, none of their ideas, none of that stuff. We go to good old-fashioned support and resistance and trend lines 9 times out of 10. All three of us, that's how we trade. As you trade longer and longer in the market, you will learn. I 100% guarantee you will learn. Simple is always better. There's guys that, trying to trade all the ICT stuff and all these crazy, you got to have this model for this different time frame. And I mean, if it works for you, it works for you, great. But what I've seen over the years of working with people in here and just, over the years of trading is that simple is always better. And the simplest, most, important in my opinion, part of trading is, oh yeah, so Assassin, that's my guy. If you guys don't know, I'm the one who got him back, Yeah, his is as far from simple as you can be. And nobody will ever understand it like he does. Like I said, kind of a tangent, but very good friend of mine. Him and I have talked constantly for the last 5 years. I mean, he's a good friend of mine. So he's doing his own thing. 99.9% of people will never understand what he's doing. I fully support what he's doing. But for me, simple. For successful day traders, simple. Don't go looking for these wildly convoluted ideas that take, forever to learn. Let the charts tell you what to do. Don't go, don't go looking for the next best thing. Don't go changing your strategy all the time. The great thing about support and resistance found on the daily is that the levels are there and they work, and you can visually see them work, and that the market will react there. And because most of us in here trade derivatives, options, futures, whatever it might be, we want a certain amount of volatility. I'm not telling you to go trade the wild, like no name, your quantum stocks that are up 15% and down 20% and up 30%. I'm not telling you to go trade that level of volatility, but we want movement. It's something I've been discussing a little bit lately. The worst thing as an options trader, and it happens to all of us sometimes, myself included, is being right on the move with the wrong amount of time. It sucks when you're right and your plan and everything was right, but you were a week short. So we want to make sure we are entering trades when, to the best of our ability, we think the move is going to come. And so for me, what I've learned over the years, what works for me to identify those types of things is support and resistance levels off of the daily. And so how do I chart them and what do I look for? I keep it relatively simple. The main things that I look for are what I describe as dramatic highs and lows. Some people call them swing highs and lows. But the easiest way to think about it is you want to look for a place where the market stopped. Whether it's up or down, doesn't matter when you're charting. You just want to say the market stopped right here. We don't care about the who, what, where, why it stopped right there. We just care that it stopped right there. So when I chart support and resistance, the things that I'm looking for are things like this. This is a dramatic high where the market stopped and it began selling. Well, for me, and what always works for me, and there's people out there that'll disagree with this. I won't disagree if they do it the other way. But for me, when I am charting support and resistance, I will always mark. I will always mark the wicks. So when I have something like this right here, I want to know, hey, the market stopped. That's what I care about. The market stopped right there and it sold down. This is another one. The market stopped right here and it sold down. So I am always going to mark the wicks. And again, just to, give a little like description of why I do this. So I'm going to mark this wick, and you can see I'm a little bit off of it. Obviously, when you're charting these, you want to be as close as you can. I will tell the thing, this was a shark quote from years ago in a lecture with me. He said, and I fully agree with this, and it's the same as trend lines and all of that. When you're charting support and resistance, the best thing you can do is, he said it, this is his way to say it. I think he said it best. You squint your eyes a little bit. We got our level at 143.63. That's what this level is right here. Is it going to reject or bounce at 143.63 on the dot sometimes? Absolutely. Like as you start charting more and more and start having good levels, you'll notice that you'll get good bounces on these areas as long as you're identifying them properly. Well, you don't need to wait for 143.63. Maybe you're buying a dip down to it and you buy it at 143.70 or 144 and know that's your stop. That's great. To the cent doesn't matter necessarily. We just want to make sure we're going through and marking the places where the market stopped and then it started going again. So again, you don't need to, you don't really need to be in there with the fine tooth comb, none of that. How I like to do this is just scanning it with my eyes. So I get my support and resistance tool. Anytime I see where the market has taken a nice pop and then it's sold down. And so this actually is working out to be a wonderful example of why we want to identify our support and resistance on the daily time frame. So I'm just going to do this example. We charted these two levels. So we knew that this was a pretty big level. And hey, if we get above it, we can look to be long, but we don't really want to be long going into it. So we can see here a couple months later, we start hitting it and start having trouble. When we finally find ourselves above it, this is where we can start looking to be long. Now, if we get the push up, we want to find out, okay, where did the market stop? And so the market stopped right here. So we know this is our new kind of level for now. Well, if we're above these levels, we know where we want to be dip buyers. It's spent a lot of time consolidating here to finally make the move to the upside. So we know from these levels way back here, this is where we want to be a dip buyer. So we get a dip into the zone and we know where we want to buy and we know where we want to target when we're buying here. So that is just by accident the perfect example of why I trade daily levels. So again, we're just going to kind of cruise through this one now. Now that you guys have seen what I do. So generally speaking, what I do is I'll work up the top side. So anywhere I see a nice big rejection and, we aren't looking for a buck pullback. When we pull back from 175 down to 165, a nice $10 flush on this thing, we're interested in that. Again, we push up to here and we ultimately pull back like 10 bucks. We like that. Another push up to here, we like that. Push up above it, we're building these nice little zones where we know we don't want to be long and where we do want to be long. Again, another push up here. Sometimes you can see, here's another great example of we knew where we wanted to be a dip buyer and ultimately we were incorrect and had to take the stop out. Now that we're under there, we know where we want to be short too. So again, I just work up the high side, or whatever you want to call it, looking for any highs where we ultimately reject it down. And that's all we do. Now, we aren't going to go this way just yet, just because I always like to do this as the example. So now you want to do the lower side. So we can see this was the high. This was ultimately the retest. We don't need a level. Bottom side, we don't need a level. We are still looking for places where the market sold and then reversed. We already have it marked from previously. This is, the great thing about support and resistance is when you're going back and looking, if your levels work. So again, I guess we got a nice one here. That was kind of a bounce that we wouldn't have expected. Already have this one marked. We got a decent little zone right here. Mark that one. Low down here, low down here, low down here, low down here. So these are our major levels. Honestly, I'd probably mark this one too, and I'd probably mark around this one too. Nice to see a couple questions. Yeah, M's and W's everywhere, always. Do I use fib retracements? Yes, that'll come in the more advanced charting stuff. I will tell you right now, learn how to do support and resistance. 99% of the time, your levels will line up with fib levels. If they don't, then you're missing levels for some reason. I love fibs. I use them, on my SPY chart. I've been using them because they can be a great tool for when you're setting all-time highs to identify some new targets in places where you don't have data. But when you get good at charting support and resistance, you will be able to find all of those levels and have all of those levels and be aware of where you want to be dip buyers and things like that without ever having to use a fib. And then the other great thing about support and resistance levels, where they come from and you get to see them working on the chart. And then which zones are consolidation zones? So something like this is a consolidation zone. We know we haven't had any success at 180, and we know we haven't had any success breaking down under 171. So if you ever have trouble identifying consolidations, draw a box. And here's your consolidation zone. You don't want to, we aren't really talking entries, exits tonight. You don't really want to be long here until you get some sort of confirmation outside of the consolidation and get the move up. That's classic consolidation right there. So, like I said, this is what I do for all of my support and resistance. You know, we only charted through these. Well, now, you know, that's all the levels we had. And this is where we ultimately started pulling back, you know, beginning of this year. So I did no new charting per se going into this year because as everything was getting crushed, I'm just trading my daily levels. You know, we're under 228. I'm eventually looking for it to go to 220. We get under this 216 to 220 zone. I'm looking for it to go to 200. You know, same as up here. We break above 233. I'm looking for that 242. So all of these levels that we have on the chart now are all from before this year. And you'll notice this whole year, and I mean, I could have marked, you know, a few more. We're going to talk that in just a second. But I'm showing you the major ones that matter the most. Now you notice not a lot of levels, move through it fast, come into a cluster of levels, all of a sudden we start consolidating. These are all old levels marked from 1 year, 2 years ago. And you can see they are still working over and over and over again. You know, we don't have a super clustered up chart. We can see places where we want to be dip buyers. You know, when we trade any type of trading, you need to know where you want to enter, where you want to stop out, and where you want to exit. When we use these daily levels, they will continue to work forever. You know, it's the same as when SPY sold in all of 2022. I was trading those 2020 levels because they will still work over and over. So you can see, you know, you can see right here, we know where we want to start looking to be dip buyers. And if we really zoom out, we know way back here, when we started selling down to here, we knew Amazon, last line of defense, 166. Otherwise, we're likely dumping to 155. You can see we had that one, you know, that's Terra Fold day. We know where we want to be dip buyers. And so there's not, you know, there's not a ton of help here. Or there's not a ton of like, you know, there's not a ton of stuff going on here. So we ignore that. We want to look at big picture and we want to trade this intraday. And we want to say, you know, here's our levels from back, you know, end of last year. Here's our range. We know our range that we want to be trading. The second we set this high and the second we set this low, now we know where don't we want to be long Amazon? Up here. Where do we want to be long Amazon? Down here. You know, where do we want to be short Amazon? Up here. Obviously not today. But you know, you always want to be aware of where those levels are. So I see right here, you don't see much help from the lows between 242 and 190. Well, sure, we were trading 222 today, so obviously all of these levels from, you know, any level from 210 to 235 is huge for the last month, obviously. Now of course we got to look at today and say, hey, you know, we don't, you know, now we're miles above all this, we're at new all-time highs, we understand all of that, but you know, to say that these levels are not helpful, they are quite literally the only levels that anybody should have been looking at for the last 2 months, is knowing to buy these dips down to 210 and 215 and knowing to not be overly long up here at 230 plus. You know, everybody wants to catch the breakout, but you're better off trading what the chart shows you. So you're correct. Our 190 levels, not super helpful right now, but they were gigantic in April and they were gigantic in May, you know, so you always just want to be aware of where they are and you want to be aware of where you fall on the chart. So any questions about the charting? I'm going to go through really quick and do 2 more charts after this. Just to show you guys, you know, the speed that I normally do it at. And then we'll touch on a couple of other little things that I like to take note of when doing this. And then we'll get into the short time frame. So unless anybody's got some questions, we're just going to rip through a couple charts really quick. And we're going to do the ones that, you know, I watch every single day. So obviously Apple, we want to do the exact same thing. Get yourself a couple years of time. Obviously Apple has spent a lot of times, so if you see a level and it means, I like this question. If you see a level and it means nothing, oh, well, no, every single one on Amazon. I was going to say, if you see a level and it does nothing, then you probably have charted it from something unimportant. You have to remember every single one of these levels is quite literally charted on a very important move. You know, this move right here dumped the, and I'm not saying it hitting 145 was it, but it dumped the market $30. You know, this level right here, I'm not saying it was just hitting 156. There could have been news. It dumped the market $40. Why did I put 220? And so this is the great thing about support and resistance. Why do we put 220? Because this was the low of this consolidation zone catching this wick. And why did we put 228? So right here, big old rejection, big old rejection. Get above it, big old breakout. You see that? So you always, if your levels are doing nothing, and don't get me wrong, there is times and places where you're going to rip through levels. Like April was one of those days. Like, look at this. I mean, Amazon crushed $20 in a day and knifed through our two biggest levels and continued selling. There is, of course, going to be times where, you know, your levels get knifed through. But the important thing to remember about support and resistance is it's telling you what to do. So, for example, you know, Amazon's knifing. This is a very reasonable dip buy. Well, now that we're under it, you stop out. You know, you stop out. That's what the level is there to tell you. So absolutely, you're going to move through some of them and you're absolutely going to break over the top of them. I like this question. You're absolutely going to break over the top of them eventually, but you need to know what they are and what you're looking for that breakout. Yeah. And so a level, you know, my favorite things are when we get a bunch of levels stacked together, or we get something like this, like just no-brainer trading, where we know we get a dip to 216, 220 range, we want to buy that thing. We get a bounce up to that 228, 230 range, we want to start selling that. And so you can see, you know, this is the daily time frame. Here's 3 weeks of great trades, you know. I love it when we have, you know, a little zone like this, a little zone like this, and we're working between it. They're always going to be strong. And when you get above them, you get a move. Or when you get below them, you get a move. You know, those are my ideal levels, when you can get a nice, strong little area like this. Are any of these psych levels? No. So there's well, okay, so actually kind of sort of. So a psych level, it's going to be something like 200. You can see I have 200.5. Obviously, I marked it off of a chart. Here's our 200.5 that I marked. Look, I honestly should have been a little bit higher, about 201.30, but a psych level is 200. We know 200 is going to matter. So I oftentimes won't put a psych level on my chart because we know it's there. You know, Tesla 450 is another one. Like, you don't necessarily need the level 450 on your chart. You know it's important. Those big round numbers will be psych levels. Yeah, exactly. So you look at them like a wall and you want to say, you want to assume, and we'll get into this in the market statistics lectures, you want to assume these levels won't break. So, you know, if you're selling down, you want to buy the dip. If you're ripping up into them, you want to short the rip. Is sometimes it not going to work? Absolutely. But statistically speaking, you know, 4 out of 5 times, you're at least going to get a little rejection or a little bit of a bounce, you know. We know in the market 80% of breakouts fail. So once you've tried, you know, once, twice, 3 times, you want to be cautious on the 4th time. Ultimately, this one sold. Same as down here. You've tried to break it a few times. You've tried to break it. It's not breaking. You still want to, you know, you want to start to say, is this going to break? And maybe you get a little breakdown like this. You know, it tries and tries and tries and tries and tries. And here finally, the little breakdown ultimately does come. So the best thing to do is, you know, you don't ever want to be the first one in line. You want to let the market try to break out a few times. And then when you actually think it might happen after a few tests, that's when you try it. Okay, so with that, we'll do another chart. Again, just going to cruise through it. Going to do the same thing that I always do. Like I said, I like to start on the high side. You know, do we need this 200 level? No, but, you know, keep in mind, we were trading it just a few months ago. So we go over and we do all of our highest highs. You know, and you can do them on the downside as well, obviously. Mark all of these. Then you go to the lower side and you mark your lows where the market took real big bounces, and you want to be fully aware of those. Get some more of your lows down here. And again, we're just marking the lows. Oops, I didn't mark that one. Just marking the little lows. God, that was a money buy right there, huh? And that's all we do. God, look at, we knew where to be the dip buyer on Apple, eh? And then even got some highs here. That's it. Now we have our levels that we need. Obviously, this one's ripping all-time highs as well. But now we have our levels that we need. We know what the market, we know where these names want to bounce. We know where these things want to move to. So I want to talk Apple because I love to mark all of my major highs and lows. I also like to take note of consolidation highs and lows. Oftentimes, you're already going to have them. We have these levels. We had these levels from back here and back here. Oftentimes, you're going to have them. Well, when I see something like this just happens to be a great example. Very obvious, very obvious, very obvious. Failed above it, broke down below it. Ultimately, it became the launch pad. While this is a nice sell, this is a nice sell, this is a nice sell, you might kind of miss this type of thing if you're only looking for those extreme highs and lows. Because, we can see right here, Apple spent from July until, November, in a range. So you do want to be aware where the tops of those ranges are as well. That's one of the only other areas that, and I'll do lows of ranges. This one, we just so happen to kind of already have them marked. Oftentimes you will, but this is a place where I would slap on another level. And then so ultimately, as we come into this year, we knew where we wanted to be dip buyers. We're breaking a level. We would look for a move to the next. We get up to it. We don't want to be long anymore. We buy dips, break above. You might buy the breakout. It looks good. Sometimes you get stopped out. We still know where we want to be the dip buyer. Then when we break out again, rules didn't change. We're above levels. Now we look for moves to the next levels. So what I'm showing you here, I actually like that one too. What I'm showing you here is part to help me out if you trade in VC with me. So I get asked, as you guys can imagine, 100 times a day, what do you think of, XYZ trade? Well, you guys see how I chart support and resistance. And you guys are, kind of seeing how I want to trade it. If we're dipping 2 levels, I'm buying dips. If we're pushing up towards levels, I'm shorting rips. Well, people ask me all the time, what do you think of this trade? Because this is how I chart support and resistance, my major support and resistance is, I might tell you, hey, I don't like the trade. And that is only, it's not that I'm saying it's a bad trade. It's not anything like that. It's that it's nowhere near one of my levels. So if we aren't by one of my levels, the risk for me doesn't make sense to get in a trade right there. You guys have all, I'm sure a lot of you have traded with me in VCs. I'm patient. I wait for my things to show up. I wait for everything to line up and then I take the trade. Sometimes I miss trades. But I don't care. I know there's a million more. So if you ever ask me about it and I say, hey, no, I don't, I wouldn't take it here. I'm not telling you to not take the trade. I'm just telling you that for how I chart support and resistance and for how I analyze charts, I wouldn't be buying it or shorting it or whatever it was right there. Let's see, Yang. Yes, so it doesn't matter the time frame that you're trading on. We know that daily time frame levels are where we find that volatility that we were discussing in the beginning. These are the places where the market moves. So that's where we want to be involved in it. When we get over these levels, we want to be involved in that volatile movement up. When we get below these levels, we want to find the volatile movement to the downside. And we only want to trade when we're at those points, because if you don't, you can find yourself just getting chopped up for days and, could be right on the move, but might never make money. I mean, here's a great one on Apple. I'm sure there was people trying to buy all of these dips to 255. Maybe they made a couple bucks, but ultimately they got chopped up. When I look at this Apple chart, to me, there was only one good long entry on Apple for this entire month, and it was right here. I'll buy at my level and I'll target this next level. But anybody chasing these moves up here, and I'm sure that I was getting asked about Apple, and I probably kept saying, wait for a dip down to your 250 or whatever. This is, to me, the only entry on Apple. I will, of course, use its price action to help me with my SPY trades. We'll get into that later. But this is the only real long entry for a day trade, a scalp, a swing trade, anything like that for me on Apple for, and that was from the 22nd to the 9th of the next month. That's the only trade I liked right there. Exactly. So I love your question. I love your question here. You're asking about confirmation, so always important. So this is where patience comes into play, and where, like I was just saying, sometimes you will miss levels, but you will hear people like, me or Shark or Tilio. We are very rarely the people trying to buy breakouts. Getting in on dips for a breakout is why, oftentimes the three of us don't see much red, and some other swing traders, they don't wait for the dip. They're trying to get in for this breakout to the upside, so they feel comfortable buying higher. We like to buy lower and, maybe early for the move or whatever, but we would rather be in low than in high, But so for confirmation, this is what you want to see. Big breakout. This is actually, this is a pretty perfect example. So we know our level. Maybe we didn't catch this move, but we're seeing that momentum in Apple. Big old gapper up day on this thing. Total ripper. So for a fact, trade floor, all those guys are screaming Apple calls it open after this move happened. Well, not me. To me, there's no entry right here because, this is a very cut and dry trade right here. Your ultimate target is 260. Maybe you get there, maybe you don't get there. Your stop out is basically 250. So if you're buying 256, you got $4 of upside and $6 of downside. You got more risk than reward. Well, you wait for the dip down. You get the breakout. This is the retest. You can see it takes 3 days. It's not going to be instant. And that's an important part of trading, is being patient. Well, you get the dip down and this is where you buy. And ultimately your target's 260. Maybe you get there, maybe you don't get there, but if we're trying to buy somewhere down here, 250, 251, we know where our stop loss is. It's below 250. An hourly candle, 4-hour candle, whatever your trade plan is. All we know is weakness under 250 is our stop. So we basically got $1 risk to a potential $10 reward, versus the people who chased the move had $4 reward with $6 risk. So they have bad traders equation, more risk than a reward, and we got 1 risk, 9 reward going on over here. So we're stoked on our risk reward. We're risking nothing to potentially make a lot. And even if we get chopped up here, we're still trading $4 or $5 above where we entered. So we're happy. The chasers are just hating Apple because it's not doing anything. And ultimately, we don't hit 260 and we get stopped out. But no matter what, you had 3 weeks to take, or 2.5 weeks to take profit on this trade. So that's how we use these levels. And then again, the trade plan shouldn't change. We dip down to levels. We know where we want to be dip buyers, especially we're talking bull market right now. If this is bear market, we're going down. We obviously want to be shorting bounces, but because we know we're in bull market, we want to be dip buyer. So when we come down to these levels, no trades here, but nice big sell, buy at 243, ultimately looking for 250 or 244, whatever, stops under 244. Very small risk, very high reward. Ultimately we get chopped. We do hit our target on this one. And sure, you might be a little disappointed if you don't hold for this, but really you were offered another entry. You were even offered another entry here. So this is how we use support and resistance. When we dip down to them, we try to be buyers. When we bounce above them and retest, we try to be buyers. When we're bouncing up here to them, rejecting over and over again, we want to be short down to that level. Let the chart tell you what to do. And so you might hear people like me or Tilio or whatever say, oh no, I'm going to pay the premium. People will want to be buying this thing on the way up. We're going to be the ones that wait for that pullback. Bad fills here. If you catch the breakout, great. But me and Tilio, Shark, we aren't going to be buying right here. We will happily pay more for those contracts than the entry here, because we know that it's confirmed. So we have more confirmation, tighter stop sort of deal. Okay, so then we did Apple. Next one we're gonna do Microsoft. Obviously, all of these just on absolute heaters right now. So we're ignoring these. But this was one that I liked because again, it was one that consolidated for a year. It went sideways, you know? So we get to use our levels again. And it's a very, very excellent example of using your daily levels and understanding, you know, what they can give you when you're in ranges and the type of money you can make when you're trading in ranges. And so we can, you guys saw, you know, all these levels are from this side, from basically here back are where our levels are from. Well, now we have this very defined range. We know where we want to be a dip buyer. Anywhere down here, 380, 390 zone for if anybody was trading in 2024, hopefully you were. Anytime this thing dipped to 400, it was the easiest dip buy ever all year long. We had these levels first month of 2024. We knew this basically 390, 400 zone was crucial. Every single dip was bought for the, I mean, we had what 4 days below it in the entire year. Every single dip was purchased off of 400. We had these levels just from right here. We knew our dip buy levels by the second month or by, you know, the end of January, we had our levels. By the middle of March, we had our upside levels. We knew where we wanted to be dip buyers. We knew where we wanted to attempt to short it. It worked. It was free money. You know, obviously breakout come, you get stopped out. You get back under it, you short this thing back down. You buy the dip, you run it back up. Easy, easy, easy. These levels will work time and time and time again. No questions asked. They will always continue working. You know, we're even seeing it right now. You know, if we continue our moves up, we get our ups, we get our downs, we get our ups, we get our downs. Obviously, highs up here. You didn't want to be long up there a few days ago. Now you're probably pretty dang happy. So we use them. These are all our levels from here. Where do we want to be a dip buyer? 500. You know, spent what, a couple days under it? 500. We want to be buying the dips here. Dips down towards 500. It's so easy, you know, that like that's what you'll hear me and Shark, you'll hear all of us say it. Make trading easy. This makes trading easy. These levels, when they show up, you buy them. That's all you can do, or you short them, or whatever it is. That's all you can do. So this is when anybody who trades SPY with me, this is what I'm looking at to trade SPY. I look at my Apple's, Amazon, Microsoft, Nvidia. Those are the four that I like to watch. You know, so they are what I trade. And so then I go to my SPY chart. Obviously we got levels on our SPY chart. I believe I don't even know which one I've been trading. You can see we got lots of levels. We got lots of SPY charts. Probably this one. So you can see my SPY chart here. These are actually fibs. Doesn't matter. They're all the same thing. Not a lot of levels right here. So that's where I wanted to start to talk about intraday price action. And I'll get rid of all these trends. It is simple though. Like I got to tell you guys, if I can do this, you guys can all do this. And I encourage you, anybody that wants to, go chart some charts tonight and send them to me. I might not respond right away, but I will respond tomorrow. I'll respond as soon as I can. I love to look at people's charts. You can do this. It's super, super easy. Okay, well, so now, yeah, I love it. My DM's full of everybody's charts. I love it, dude. I love looking at charts. So please send away. So now we're at all-time highs, okay? And we don't have a lot of levels up here. Obviously, I'm just trading fibs. So how am I trading this when I don't have levels? How am I trading this when I don't have levels? Intraday support and resistance. So we're going to look for the exact same things intraday that we look for on the daily timeframes that can provide us some scalps. So what you might notice though is when we have our daily timeframes all charted up on our Apples, Amazons, Microsofts, Nvidias, you can almost guarantee all of those names are at a big level right here, because it is important to remember SPY does not have a mind of its own. SPY only does what the things inside of it tell it to do. So we know those big names are at a big level. Now, we might not have a level on SPY, but we want to do the exact same things. We know where they bought it. We still want to be aware of our major highs and lows, and we know where we want to be a buyer. So when all of our big names line up, that's when we look at these intraday price levels. You can see, just for the example's sake, I'm just using lines, just how you would draw a trend line. This is defined right here. We knew this nice little pre-market low or whatever it was. I'm not a huge pre-market low trader. Maybe it wasn't even pre-market low, but it was important. Oh, look at that. That's actually even better, So we know where we want to be a dip buyer. It's very cut and dry. The chart tells us, the chart says, hey, this is where you want to buy the dip, and this is your risk. Now the big names confirm it for us. They're probably bouncing as well. So we know, okay, I can buy this down here. We don't, it's 682.32 and 682.12. These to me are not worthy of being on a chart. Did we get a nice little reaction on them intraday, and maybe eventually we do get a C on the daily? That was a big time frame. Yes, but they don't find a permanent place in my charts because they worked great today, but who knows if they'll work great tomorrow. Then we do the other side. Here's our top resistance. It happens to be 683.23. Well, we know this is that breakout point of this consolidation. We know from consolidation comes breakouts. So, and we know in consolidation, we want to be long at the lows, and if anything, we want to be short at the highs. We'll get into statistics of how many times in one of our later lectures, but you can see here, more tests, the less you want to be long up here. More tests, the less you want to be short up here. More tests down here, the less you want to be long. But here is our defined range. We're buying 682.30. We're stopping under, call it 682. We got 30 cents of risk. We're looking for 683.30. So we're risking 20 cents to make $1. It's that cut and dry. But these are what I look for. Same things we're looking for on big time frames. I also look for on shorter time frames, major highs and lows where the market has reversed, something like this. We bought up to here, so we know we don't really want to be the first ones long. This is a double top. We short the double top. It will almost always pay you for a scalp. Or if we're wrong, here's our stop. We risked 10 cents. That was it. There's our stop. Ultimately, it did pull back a little bit, but there's our stop. Tiny risk, nice reward is always what we're looking for. So as I go through the charts, during the day, that's all I'm looking for. I want to look for major things that matter. One of the other things I want to zoom out just to show this. I don't mark previous day highs. I don't mark previous day lows, but I will take note of them. But for me personally, I'm oftentimes more interested in where did the day close and open, because we know that's what big money cares about. They don't care about intraday volatility. They care about where did we start and where did we stop, And so I might take note of, okay, here's our closing price. Well, I know I don't want to be short here because we closed here yesterday. Do I want to put this level on my chart? No, but I know that we closed here yesterday. So these intraday support and resistance types of things, even here's the other one. We see our range, ranges always lead to breakouts. Maybe these levels matter tomorrow or the next day or in a week, and maybe eventually the daily time frame tells us to always be aware of them. But for now, we care about it the next day. Okay, we knew this was big yesterday. We knew they bought it here yesterday. Maybe I try to buy it here for a bounce. Or maybe when we sell below it, reclaim it and retest it, I try to buy it for a move to the top of the range. If, we try the top of the range a bunch, so we likely don't want to be short anymore, for scalps maybe, then breakout retest comes to our level. So to our daily level, where at our daily level, we definitely want to be out of there. And especially, we'll get into some more advanced charting, here sooner than later. This was what I actually had on my chart that day. We know big daily level, first attempt over it after a nice move upside off of resistance or off of support. We don't want to be long up here. So ultimately we did catch a short the other day. I answered your previous day high, previous day low. So again, does everybody get that? Any questions there? Super simple. It's the same thing we are doing on the daily time frame. We're looking for any sorts of major highs and lows, and we are assuming they are a level. If we get a break and retest that holds, great, we can be in there. If we don't, we can try to catch the bounce here under there, we know now we got a daily level. Daily level, obviously this is FOMC, but daily level is our resistance. Until we have good retest confirmation over this, we aren't in there long. Ultimately, this is FOMC. None of this, that's all make believe as far as we're concerned. But we know we can be short biased as long as we're rejecting this level. So that's what we want to do. Every single day, you will be able to enter the market and you will be able to identify these things. We're obviously going to get into trend lines in a different lecture. Trade these trend lines. They're the same, trend lines are nothing more than support and resistance at an angle. We know that we're going to get the reactions. We know where the reactions should come. These are where you're longing things. These are where you're shorting things. Sometimes you'll get a hammer at 10 times. Sometimes you'll get a hammer at once or twice, and that's it. But this is what I do day in, day out, no questions asked. I'm looking at my major daily levels. If we're close to them at the highs, I'm looking for shorts and I'm using intraday price action to tell me where I think it's going. If we're holding slightly above them, I'm looking for longs and bounces until we break below or until I make money on the long side. Okay, so with that, that's it. Everybody get it? Any questions? Like I said, it's simple. If you have any questions, let me know. But it's simple. Look for wicks and where did the market start and stop? What's the significance of inside candles? Well, Brooks loves them. IOIs, inside, outside, insides, and things like that. They're just showing you that the market is making a little bit of indecision. That, as long as we are printing inside candle after inside candle, we are ranging. And oftentimes, if you get to some of these like longer time frames where you're starting to you'll really start to see, I mean, probably on the 30-minute, whole day is an inside candle. We don't have, is inside candles of this first candle of the day and even the second candle of the day. We spent most of the time in there. To me, there really was no confirmed breakdown. You could make the argument for the one here, but the official breakdown on the day was right here. And that thing lasts like 5 minutes before the ERs bought us back up. So inside candles are just kind of, they're kind of defining a range for you. I used to have a method, maybe we'll talk about it. So something that I like to have people do, and it won't work if you're on Webull or things like that, because they close their candles. The hourly candles don't close on the hour, they close on the half hour. But a really, really powerful range is going to be your first hourly candle of the day. It's actually going to be 30 minutes before market open and 30 minutes after markets, opened. So you get a little pre-market in it. And oftentimes it's going to define that range for you super, super early. So all of these blue lines, these are daily support and resistance levels. These ones happen to be fibs on here, just because we're at all-time highs. We'll get into that later. But any of these levels that we were just marking on, all of these are on heaters right now. Everything we were just marking, all of these blue levels, these are all daily levels, all found off the daily time frame. Just identifying our points of interest. You will save yourself a lot of heartache not trading unless we're by them. Because if nothing else, you get to know when you're right and wrong as quickly as possible. And that's what I hate. I hate seeing these people swing trade. Oh, well, I'm down 60%, but I got 3 weeks and, we're just selling down to strong support. Well, in your head, you should be saying to yourself, if we're like, oh yeah, I want to buy calls at support. So if you're in calls and you're selling to support, then you're in a trade you shouldn't be in. And so that's what, that's what these daily levels are for. They tell us when to put risk on. We know out in here, no man's land, we don't care. We know dips down to 210, 215 area. We are dip buyers looking for moves to the upside. We know pushing up here, 230s, 235s, we don't really want to be long. I understand we're getting a blowout right now. It's earnings, doesn't matter. We know we don't really want to be long, and we know where the risk reward favors the shorts. And that's what everything is for traders. It is capital preservation. You want to risk as little as you can to make as much as you can. I'm not telling you to diamond hand things, none of that, but identify these low risk, high reward trades, short 233, stops over 237. You got $4 of risk. absolute best case scenario, you're catching a $20 move down. That's a trade you take every single time. Whereas if you're longing up here, this is resistance. So maybe you got a couple few bucks of upside, but there's just not much meat on the bones. Whereas it's the same situation down here. You're long in 216, your stops are under 211, so you got $5 potential downside. Well, the upside is, best case scenario, 236. You got 20 upside for 5 downside. It's a no-brainer, and you will never find levels with the strength that daily and even weekly levels, but daily levels have. So let's see. Chino, you might not like to hear this. Don't even trade the 1 minute. I have met one trader in my life that I approve of him trading the 1 minute. However, I have helped and worked with dozens of traders that the second they got off the 1 minute, they started doing worlds better. It is just rife with fake outs. What I always recommend to people is if you are unsure, look at a longer time frame. Like if the 5 minutes not telling you much, I don't know if we'll find a good example. If the 5 minutes not telling you much, then maybe go to the 15 and say like, okay, where are these candles really consolidating? If you still aren't getting much, go to that 30 minute and you'll start to say, okay, right now, and it's funny with the explosion after hours, you start to say, oh, okay, the sellers are in control, and you can really identify that here. Maybe you can catch a couple nice bounces, but you can start to say the sellers are in control. So my recommendation to people is always don't shorten the time frame. Make the time frame longer and you'll find a lot more success. Man, good question. Honestly, for me, I'm super lucky. And I'm completely self-taught. But I started with shares. So I learned the market in a less risky market, and don't get me wrong, I've learned a ton from people like Tilio and Shark and things like that. But most everything I learned on my own, obviously from people, not just looking at charts, but studying other people. And I mean, the thing that really changed it for me was this type of analysis, daily time frame analysis. You find better risk reward trades trading on the daily than any other time frame. And you risk the least to make the most. And that's what all traders need to do. Obviously, I was lucky enough. I never struggled with the YOLO and shit or any of that. That's not my thing. Always been just consistent. I do the same thing over and over and over and over again, and it works. And so daily time frame analysis changes it for everybody. Anybody I do one-on-ones with, anybody I've worked with over the years in here, as soon as I start telling them, chart the daily time frame and take trades when the daily time frame levels line up, they start doing way better. It just saves you so much heartache. Let's see. Okay, so we got that one. Yeah, Jake. I mean, and that's for me. And don't get me wrong, I don't want to, if you're finding great success on the 1 minute, like I don't want to tell you to not do it. Like I will never tell you don't do something that works for you. But for me and for everybody I've worked with, and from all of my hands-on experience with I have talked to many hundreds of people over the years in OOT, the 1 minute traders oftentimes don't do well. So just do what works for you. Yeah, exactly. Flipping it as longer helps a little bit. How many candles for confirmation before you actually put an order? So Nando and I trade in different worlds. I'm going to tell you right now. So when I trade, I'm going to say, and this is completely made up, that I have no data to back up this. 80% of the time when I am trading, if I am buying a call, that candle is red. If I am buying a put, that candle is green. I want to be, and this is talking scalping things, specifically SPY and stuff like that. I want to buy volatility into strong levels. It's of course risky. You can't just buy every red candle of the day, but you want to, look at a chart. I mean, let's take a random right here. So we can look right here and we know yesterday, here is our strong support. Here's our strong support. from yesterday, we know that if we get a hard push down here, here's our next support level, you know, and these aren't anything you put on the chart. For me, right here, this is where we buy. Like, and so this one's actually hilarious because this is also like my favorite candle in the market. I don't call them hammers. I don't do any of that stuff. I call it a reversal candle. That's what it is. It was hideous. Well, I'll buy this red. I know where my stop is. Uh, Exactly, Jake. And so, okay, so I want to give a little bit, this is just another piece of advice again. And if anybody's got to get out of here, thank you for being here. Nice little turnout tonight. I appreciate all of you and like epic questions. I've loved the participation tonight. So here's what we got going right here. We know where we want to be a dip buyer. We got our daily levels. We got our other, you know, our previous day levels. So a bit of advice I use, and this isn't something that I made up. I think this is Paul Tudor Jones again. He's the GOAT. You know, Al Brooks says the same thing. Many retail traders, if you wait to buy where you plan to stop out, you will start making a lot more money. Retail traders have a truly, and this is no disrespect to anybody, it happens to all of us. It happens to me. I'm a retail trader. You know, it happens to all of us. But retail traders have a truly unbelievable ability to stop out of trades where they should be buying, or to be buying when they should be shorting, or shorting when they should be longing. So this is a great example. To me, I'm gonna buy this and I will happily stop out one candle later if we are selling under here. My risk is nothing. 50 cents, you know, or, you know, yeah, 50 cents, give or take, is my risk. And ultimately, I'm looking for a nice big bounce. You know, I mean, I'm going to be looking for obviously these highs, and then my next highs are going to be up here. So, you know, I'm risking this little zone to catch this, and then maybe catch this. And then if I get really lucky, catch this, which you didn't get really lucky this time. But the chart is telling us, where do we want to buy? We want to buy where people bought before. And where was one of the most recent places people were buying? They were hammering it back here. Once we got over this thing was all gas, you know? And you'll see, oh, look at that. Yeah. So again, you don't need, these levels won't live on my live on my chart. But if I was taking this trade, this is exactly what I mean, this is, wow, I gotta be honest, I would have taken this trade in a heartbeat. So we know the highs over here. We know our previous resistances, you know, kind of what we got yesterday's, we got these. We know where the buying really, this is where the market opened yesterday. This is where the buying exploded yesterday. So we know this is where we want to be buying because we want to look for some explosive buying, you know? So we buy here with tiny risk. We target where people started selling it yesterday. So we sell some here. Then where did they really start selling it? Right here. And obviously, where do we stop the very next day? At the exact same spot. So this is a trade I'll take every single time. And you know, it might feel a little bit weird because we are buying on the break of a level, but we had, technically speaking, one candle closed under it, another candle closed over it. We retested here, but there's a lot going on right here to say, okay, I can short this. I only got 50 cents a down. You know, this is all I would be looking for. That is not worth a short. So this one's funny. You can buy this candle. You can buy this candle. You can buy this candle. All you're changing is 20 cents of risk. That's all you're doing. And while everybody is screaming short this thing, you are getting the best possible entry. Then as people start chasing up here, you can see getting smoked. You know, that's what always gets people. They see a bunch of green candles and they look for more. That's not what I do. I see a bunch of red candles into what I consider a strong zone, and I say there's not going to be any more red candles. Are you going to be wrong sometimes? Absolutely. But you'll start finding a lot more success just waiting for these things to show up for you. And you don't, I mean, we aren't getting into this. This is a more advanced side of options trading, but the worst places you could buy calls on this chart are right here, right here, right here, and right here. Did they ultimately make money? Yes. But you dramatically limited your potential reward. It is wildly uncommon. Like you'll get this move where you get a big green candle and another big green candle. Very, very rarely. same as this. You know, we got a big red candle that then bounced huge, you know, and then ultimately sold. People shorted this for sure. And then people shorted this, and ultimately they did get a little lucky on this one on the small bounce on it. But when you're seeing something like this, you should not be looking at the tops of these green candles to buy. You should be saying, I want to buy here, you know, or oh, here's a pullback. I'll buy this pullback. Stops under this level. Here's a pullback. I'll buy this pullback. You know, you don't want to buy here. The people who buy these kinds of things oftentimes run into this. And then this is a great example of about the time they're stopping out because they think it's reversing on them is really where you should be considering entering this trade with a tight stop looking for a move back up. So don't chase. Yes, and Jake, you aren't alone. I mean, we got analysts in here that do the same thing. They see big green candles and they can't resist calls, or they see big red candles and they can't resist puts. You know, I mean, like here's another great example. Inverse three white soldiers, funny enough. But you know, some people shorted here and they got lucky. The people who shorted here, they made a little bit of money, but they got blown out because they didn't do that. They didn't take their profit down to this level. The people who shorted this, they thought that this was continuing and they got blown out. Me, I would have been looking at the exact same thing. You know, to me, I look at this again. Where am I buying Amazon? Right here. Where might I try to buy Amazon again? Right here. Where might I try to buy Amazon again? Right here. You know, it's all defined for us on the chart, you know? Previous day open. Yeah, I had the open on there, but see, I don't even care. It's not even that it's about the open. It's about that I saw a reaction. That's what we care about. We don't care where like, I can't say this exactly. I mean, a little facetious, but like, we don't care where the market opened. We care where reactions came from, you know? And then I just drew this, you know, these were obviously just trend lines. If you were drawing a level, you could be more accurate, but we knew where a big reaction happened before to downside and to upside, you know? This was the launch pad where this thing really got to running, you know, obviously a nice bounce down here. But we, you know, and I should, again, I just want to clarify this. We are in a bull market. So we want to focus mostly on dip buys. Don't get me wrong, I'll scalp spy short and stuff. We do it basically every day, you know, but we aren't looking for long-term shorts. We're, you know, we are in a bull market. So we want to look to dips to strong, you know, daily levels coupled with previous day levels. We have a very defined spot where we want to be getting long. Do I only trade big name stocks? Definitely not. I trade AT&T. I trade Coca-Cola. I mean, I guess those are big names, but they're slow movers. Bank of America. I don't trade any of those, like, you know, the no revenue, like no, like, you know, those kinds of stocks. I don't touch those things, you know, but, you know, but I trade everything. But for the most part, I trade, you know, SPY, QQQ, Apple, Amazon, NVIDIA, some, AT&T, Coca-Cola, Bank of America, XLF. I mean, a little bit of everything. So you don't ever know, but what all you know is where you want to buy. And once you know where you want to buy, the trade has two outcomes. You are right or you are wrong. All you can do is, to the best of your ability, say, okay, this is where I want to buy the dip. I'll find, because it's not always going to work, you know, like that, like nobody has a 100% win rate in trading. Let's see, I'm trying to just find like a random example, a quick glance at a chart of a trade that I would have taken and I would have lost money. Well, Amazon's just not really giving it out right now. See if something else does. I don't know. I'm just not seeing any bad trades that I would have taken right now. Yeah, I'm really just not seeing any bad trades. Maybe I can find a bad SPY trade I took or something. But that's, I mean, the point of it all is you aren't always going to be right, you know? Like even, even so, oh no, I forgot. Okay. So, well, we made money on this, okay? But this was a trade that I mentioned in the voice chat, and I said this double bottom is worth a shot. This is just from earlier in the day, no big deal. Double bottom right there. It was late enough in the day that this candle paid a lot, so that's kind of luck. That's just the luck of options. But you can see double bottom bounces up. It's a reasonable enough buy. You're gonna have a tight stop on it, 681 or whatever it is. And ultimately, you're wrong. More often than not, double bottoms will work great. But this is one where, and this is a trade that I did take. We made some bucks, and I got stopped out on the extra ones that I had. But if you didn't get to sell this candle, I think we actually bought this, but if you didn't get to sell this candle really quick, you might have not made money on that trade with me. But to me, I'll take a double bottom every time. This one ultimately failed. So it was a very easy trade to lose money on. All we knew was where we wanted to be a buyer. So we tried to buy, and we ultimately were wrong. What is the best time frame for scalps? 5 minute, in my opinion. And then my rule of thumb on a scalp is I want to hold it for 1 to 3 or 4 candles. So I want to be in there for 1 minute to 1 minute to 20 minutes. Otherwise, I get over it. That your entry was not ideal if your scalp takes that long. How much time do I buy on TNKO? Generally speaking, the next weeks. It depends. I will put some long swings on them sometimes, but generally speaking, I'll just go the next weeks right at the money or in the money is my go-to generally. How far back are you going? Only as far back as you need to. Just I can use we can always use SPY as the great example. Because we can see like look at this run from 2020 all the way into the end of 2021, face rip of a lifetime from basically the end of 2020 into the into there end of 2021. Well, you didn't think you needed these levels back here, like maybe you didn't. Like it's we're in 2022, and you start looking at this chart and you're like, okay, I don't need levels at 360. That's $120 below us. Well, lo and behold, where does the dip buy of a lifetime come? It comes right here. It comes from your levels in 2020. So 2 years later, we ultimately get to come back and say, okay, I know where I want to buy the dip, and we ultimately get to end up bottom ticking the market. So you only need to go back as far as you need. Like if you're charting SPY right now, and I'm not saying it'll never go to 350 again, but if you're trying to, well, and I guess SPY is a bad example because we're just at all-time highs. But if you're trying to chart SPY right now, you're mostly interested in this year only, go back and see how we opened the year. And you're mostly interested in just this year. A little bit of both, but mostly all options. Okay, well, if that's going to do it, everybody, thank you so much. Awesome questions. Sorry we ran a little bit long tonight. But as always, my DM's always open. If you got any questions or anything, please feel free to reach out. And if you're struggling, let's get you going the right way. But right on, everybody. Thank you so much, and we will talk to you soon. Thank you.